Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, welcome to another episode of Kiss My Assets. I am Jamison Manwaring, co-founder, CEO of Neighborhood Ventures, and we have a great team on with us today. Bart Diehl, who is our Director of Marketing. Hey, Bart.
Howdy.
And his partner in crime, Heather Andrews in Investor Relations. Hey, Heather.
Hi.
We have some exciting stuff to talk about today in the world of multifamily. And the first thing I want to start out with is this new report that just came out in the last quarter with some of the transactions that occurred in the Phoenix metro area. We know transactions are way down. So that is occurring both with single family and with apartment buildings. But transactions are still happening. And the ones that are happening at a pretty attractive sell price for the seller. So I want to look at a few of these. And these are transactions for buildings over 100. And here's the top that happened in the last quarter in the Phoenix metro area. So this first one, this is Tempe, 263 units, and it sold for 560,000 a unit. So this is an apartment building that's selling for 560,000 per unit. That's a lot even for a house. So obviously this is a nice apartment building, just built 2021. I'm assuming this is probably one of those buildings that has multiple people living in a unit. So I think this is like a 4 people in a unit, and then they rent each one for 560,000 unit. Really strong price point. And then the Griffin, who we have a coworker who has lived here before, said it's very nice. 277 units, 461,000 unit. So these prices have not come down. And I always look at the price per square foot. So the prior one is 482. The last one is 300 per square foot, and then Alta Raintree, another one, 428,000 unit, 450 a square foot. Our last building that we acquired, the one on 17th, Venture on 17th, we acquired it below replacement cost. We got it around 250 a square foot, and that's for a brand new 2019 building. So I feel even better about that one as you see some of the comps and some of the recent sales. And then I want to scroll down. So these are 3 additional sales that occurred in the last quarter, and these are under 100 units, and these are all really strong price per unit too. So this first one, these look like townhouse style, and they sold for 750,000 a unit, 15 million for 20 units. I mean, that is not a cheap a cheap unit. And 432 unit. And then you can see the other one, Canal on Baseline in Kent to Waterfront, still even the Waterfront was 362 unit. And these are newer product, all built in the last couple of years. Has something to do with why they get these higher price point. The transactions are happening. They're just happening. They're happening less, but it's good to see some of these that are happening. So as you can see from this data, the last 2 quarters, the transaction volume has been way down. I mean, it's compared to the end of 2021. Just looking at it here, here's 2021, here's the last couple of quarters, and this is 2 quarters in a row. So we're starting to see a trend. This is similar to what we're seeing when it comes to the sale of single family homes. People do not want to sell single family homes right now, and the same is true with apartments.
So with respect to multifamily, can you explain why, for people who may not know, why transaction volumes are down?
Yeah, so one of the main drivers is right now interest rates are higher, and we know that the Fed has driven interest rates higher, and they put it into what's called a restrictive territory. So they're trying to slow the economy down by putting interest rates in the range that they're in. And at some point, the Fed will come back to a moderate interest rate range. And when they do that, then you'll see transactions occurring again, because when you go buy a piece of real estate, you're typically getting debt on that real estate. And anything that has a fixed income stream, like apartment buildings that are paying the same every month, if the cost of debt goes up, then the profit goes down. So when rates are at an elevated status like they are right now, that decreases the value of real estate. And a lot of folks who own buildings, they're just saying, we're not going to sell right now because the properties are doing well, they're cash flowing, and they would rather wait and sell at another time, maybe in a year or two.
And I know we talked a little bit that on our live stream, and why we're holding on to properties for a little bit longer. The same idea, and that our properties are staying leased up and profitable, and so waiting for the right time in the market to sell.
Yeah, and if you own an asset and it's cash flowing, you have no need to sell it, then you're not likely to do that today. Now, if you have to, if you own a single family home, you have to move cross country for a job. Those types of things that are happening are what's driving the sales, but they're kind of the one-off that happen on a single family basis. When it comes to apartment owners, some of the buildings that are selling, people get in a situation where they maybe a partnership has come apart. In the case of one of the buildings we recently bought, the owner passed away. And his mom inherited the building and didn't want to hold it anymore, so they sold it. So there's some transactions that are occurring, but it's not the normal flow that we see.
I know it's a good time to own multifamily, I think.
Yes. So I'm going to transition over to some other headlines that are happening in Phoenix around real estate and around the economy. We saw that this new tower was approved in Phoenix, and this is going to be the tallest tower that we have in Phoenix, so that's pretty cool.
I love that.
We have, you can see by the look of this thing, this is definitely gonna add to our skyline.
It's too tall.
And when you do a tower like this, and you're gonna be the developer who's gonna build it, it is a long-term commitment. This is a Scottsdale-based developer. This is going to be over $500 million project, 45 floors. It'll be taller than the Chase Tower now, which is the tallest currently. And it sits on 2 acres on Van Buren and Fillmore, right in downtown area. They're going to begin in 2024 with the project, second quarter, and it will be built in 2 phases. But when they're done, we're looking at 700 apartment units, a hotel, a bunch of commercial office space, and then also commercial office and retail space, and then a lot of parking to accommodate that. The one thing that's got a little bit of controversy earlier in the year as this project has gone through zoning was that there's a lot of government incentives for these guys. So the way that this works is the city is leasing back the property from the developer for 8 years, which basically means during those 8 years, they are not going to have to pay the tax to the city for that time. And then after that, it would go back to the developer, and they'd have to start paying tax. So there was some pushback from local folks who don't like this sort of project being built. The city ended up approving it. So you guys are both Phoenix natives. Are you tired of seeing all this type of development? Are you gonna move out of Phoenix now that this has been approved?
Never leaving Phoenix.
I love cranes. So if I get to see some big cranes putting a tower together, I'm fired up for it. And I agree with the city, maybe reducing the tax implications. I think you said 8 years makes sense when something's going to come in and it's going to generate business. It's going to generate wealth in the economy. So I'm all for it. I'm for this project. I hope it works out well.
I love this trend of these mixed use spaces. I think that we're seeing that more and more, that it's never just one thing. And so I think, and also growing up here, Van Buren, that area, very different vibe a number of years ago. And so this is really exciting to see the change.
Jamison,
what do you mean? What do you mean a different vibe? A few years ago, what was the vibe?
Well,
for those of us who
growing
don't know.
up, we were told not to go down to Van Buren. I was not allowed to go down to Van Buren. And now this would be a very exciting place to go.
Now downtown Phoenix is definitely changing, and it's changing for the better. It's getting safer. I feel like it's
getting cooler. Like it's
cool. It's a cool place to go. It's a destination. Whereas in the past, it was just downtown Phoenix.
That was kept your doors locked, and now
Other good things happening across the valley. Out in Mesa, Google has announced that they're going to start the work on their $1 billion data center in Mesa. This is a big, huge project for the East Valley. The data center, it's Sossaman and Elliott. So this is East Mesa, but we're talking a total of 750,000 square feet.
Wow.
in the additional phases and an initial 288 in square feet. This is kind of the same deal where Google got a 25-year abatement on the taxes, working with the Mesa City Council. Now, these projects are obviously different because when Google comes in, they bring in a lot of jobs.
I was going to say, does the other property feel bad? They only got 8 and Google got 25.
Yeah,
I would go back to the table.
Competition.
Yeah.
But Google is not only bringing jobs in the development, but then after the fact, there's going to be a lot of jobs there to support the data center. I believe a couple thousand jobs that are good tech, high paying jobs that will be in Mesa for a long time.
Or the new Silicon Valley.
Yeah. Speaking of the new Silicon Valley, there's a guy named George Kurtz. He's the CEO of a cybersecurity company.
He's my favorite.
Yeah. Do you actually know who he is?
No, I do not.
Anyways, he bought. Do you guys know where Cracker Jacks is?
Yes.
So he bought all the land of where Cracker Jacks is,
Yeah.
and he wants to build this this tech plaza. You know, it's sustainable. New, he's calling it the Park.
Okay.
So it's this new up to date. He wants to make it based off of like Central Park, New York.
Oh.
So we're gonna have that in Scottsdale, and it's the same thing. You know, he knows there's a desire for people in Silicon Valley to move to a better location like Scottsdale. So he's building it,
and they will come.
Yeah, as Heather always says.
I know, but I think we just keep stealing things from California. We steal their people, we steal their developers, we steal their.
It seems like we're seeing what's failing in California and how we can make it better here.
Although we still love our Californian investors.
Yeah, California's great.
Yes.
Well, in this project, we already talked about the 25 years that they're getting from the city of Mesa in this GPLET agreement. But they also have requirements to get this thing built in a certain amount of time. The first phase is supposed to be complete by July of 2025. One of the things that was just announced on the north side of Phoenix is that the Taiwan semiconductor plant is behind schedule because they're behind on they don't have the labor that they need. So Google needs to stay on top of this to make this happen, which is a nice incentive for the city. And there's no better company that can come in and has the dollars to do an investment like this than a Google. I think this is part of what's related to what's happening in Arizona is that new data that came out, Arizona ranks number 3 out of states for new, wealthy, high-income folks migrating to that area. And we just touched on some of the states where, California is always kind of the whipping dog as far as where people are migrating away from. We'll talk about that in a minute. But if you look at the states with the largest positive net income tax migration, Florida, Texas, which are 2 very large economies. I mean, much larger population-wise than Arizona. And we're right behind them in that 3rd spot with almost $10 billion in positive net inflow. So these are people who have over $200,000 in income. On the other side of it, here are the states that are losing wealth. And these tend to be states that have done really well in the past. They're expensive places to live. The governments that are there are not business friendly. California, New York, Illinois, kind of the top 3. Chicago's losing a lot of its kind of prestige. A lot of people moving away from there. New Jersey, Massachusetts, Ohio, Pennsylvania, Michigan, Indiana. This sort of wealth transfer going from these states and the base in tax revenue and the migration that we're seeing on the other side to states like Arizona. This is a big transition when it comes to the local economies, the taxes that can be generated from that wealth, and it's clear from this type of data that which states are up and coming, which states are in decline.
I think people are just catching on to what we already knew.
Yeah, and I also know that business owners, people who are wealthier, they value their hard-earned dollar. So, I mean, it makes sense as to why they're going to states with, friendly business policies, or, I think Florida and Texas don't even have a state income tax. So it makes sense that they're going there.
I think it's part of that, absolutely. Yeah. And that's always been a big driver. And then if you also look at these states, so Florida, Texas, Arizona, I'm going to leave Colorado out of it because they are a little different. But if you look at the climates in these states, these are all southern states. Then you go to North Carolina, South Carolina, Tennessee, Georgia. You have Utah and Colorado, which are cold. I've lived in Utah, but the rest of these also, it's climate, it's kind of lifestyle, quality of life.
Yeah. People want the sunshine.
And if you take away California, look at the weather in these states: New York, Illinois, New Jersey, Massachusetts, Ohio, Pennsylvania, Michigan. Those are some of the most miserable winters. So everyone right now is complaining about and commenting online, how can you survive in Arizona? It's 112 for a certain number of days in a row.
It's only for a few days, and then you have the rest of the year to sit outside by the pool.
Exactly.
You can do it.
We're still smiling. I mean, you can see the window outside of you. You got a palm tree there. We're surviving. Life is good here. But people in the Northeast, they're having a good summer right now. We'll give them the 2 or 3 months in the summer, but nobody wants to be there in the winter. Some data that just came out about our rents and about our housing when it comes to supply and demand. This is something we talk about a lot. And this group, Rent Cafe, who does a lot of data analysis around rents, they're saying that unless Phoenix takes some aggressive action to add housing units, that by 2032, rent could be double what it is today.
That's too high.
Yeah.
That means over a 10-year period, you go from, we're going to look at the data in a minute, but if you think of doubling anything in a 10-year period, especially your housing cost, that is a significant jump. And they also point out that, on the other hand, Phoenix is one of the cities with the most undeveloped land, third in the nation among the metros. And so it's in a unique position where we can curb this if we allow developers to build the housing that's needed. And this particular data is saying that there needs to be 93,000, almost 100,000 new renters that are going to be coming into the pool. And let me just put up one more piece of data and then we can talk about it. But this is taking rents from what they are now, around the $1,400 per unit range, just over $1,400, that over the next 10 years, that those numbers, if we stay at a low level of housing units per year, and they're using 1,000 new units per year, that we could go all the way up to basically 2,854, and that would be double where we're at now. If we are at a slightly more aggressive, but still not aggressive enough, we're going to be in these other ranges about 2,600 per unit. So rent is expected to continue to go up either way, but to look over the next 10 years, it could almost double is a serious problem.
I think this is a good solution. My only worry is that all the areas that's listed out, we have Desert Ridge, you have Midtown Central City, Tatum, Highlands, Northgate Village. Those are all already areas that are pretty high traffic. So my concern is, building more there. What are we going to do about the traffic in those areas?
You start riding your bike.
Yeah, I get that, but it's also just foot traffic too. Like there's a lot of people in those areas already.
Well, isn't there, when they talk about how much space that's available to develop, isn't a good portion of it already like approved and ready to go? Like they've already kind of got the go ahead and someone just needs to develop it?
Yeah, but that's just it, is that it requires a developer to come in and buy the land and take
Easy
it through
peasy,
entitlements. But reality is those areas that you're talking about, Bart, they are busy now, but compared to more dense areas across the nation and big cities, they are not nearly as dense as they can be. And those are the areas, for better or for worse, where we have the infrastructure to make them more dense, to add more apartment units, to take the single level homes and take those out. Not necessarily homes, but single level rentals, and build up, 4 or 5 levels is kind of the next stage. But if you think about where these people are going to live, they can't all move out to Buckeye in the far suburbs, because the employment centers are here, and then the more central areas have light rail, they have public transportation, they have the infrastructure, the freeways. So unfortunately, we're going to see more traffic, we're going to see more density in these areas. And it's not a perfect solution, but the choice is, if we don't do that, then the cost of housing will continue to go up, as we've talked about, because there's just not enough places for people to live, and it's a supply and demand thing. It's the same thing that's happened in California now, where you can't, in the LA area, nobody can afford to live there. You can't afford to buy a house, and rents are sky high there.
No, it's a selfish worry on my end for sure. I don't want them to become too trafficked, but I agree. It's a good solution.
And I think with multifamily, they're offering more co-work spaces and more amenities where people are able to stay in their neighborhood for more and not needing to do long commutes. So I think that helps reduce some of that traffic and congestion.
That's really the solution for that is in my opinion, is even living in Phoenix now, I think you have a better quality of life if everything's within 10 or 15 minutes. If you're commuting 30 minutes to work each way, you're spending an hour on the freeway, and then the other places you go to are around further than that. It's hard to have a high quality of life. You're spending an hour and a half, 2 hours in your car. But in a place like Phoenix, you can really build and say, okay, I'm going to work in this area. I'm going to live close by. And that will become more and more of a need going forward, because if you're commuting a long ways, it's just not a good quality of life. And then as the traffic is slower, we've kind of been used to being able to get around quickly on, except for a few hours during the day where there's a lot of traffic. But as it gets more busy and it turns into more of what they experience in Georgia, what they experience in Houston, Dallas, LA, that's coming here. We know that's where we're going, because those people will be on the freeway. So then you end up having to figure out, how do I optimize my time? Where do I live? How can I live and go to work without having to get on a freeway? How can I just stay on, be all in that same area?
That's actually one of the first things I remember you telling me was when you were deciding where you wanted to live in this area was because you didn't want to have to drive on a freeway to work.
And I think you're one of the strange people that likes to be in your car for an hour alone.
It's my time to unwind.
Yes.
Yeah.
It's going to get worse. So that will become more and more of a need. And so this acronym is called NIMBYism. So it's not in my backyard.
Like Pokemon.
So wherever we live, we want people to have affordable housing, but not near where I live. That needs to be here. That needs to be here, and we're going far away. And that's something that impacts many areas, is this idea that we're going to be really restrictive around us. But in order for Arizona, in order for Phoenix to not turn into California, we're going to have to allow more development of these housing units. And it's going to have to be in our neighborhood, and we just have to. It's a different mindset than what a lot of people who grew up here and lived here a long time are used to. So a couple things from a more macro level that we're starting to see some positive trends. The first one is that pay raises are finally beating inflation after 2 years of falling behind. So we saw after COVID and during COVID that inflation just took off, and pay raises also started moving up, but they fell far behind just even keeping up with inflation. And so we know that when inflation happens, you can buy less with your dollar. So if inflation's occurring at a 10% rate, if your pay raise is a 5 or 6%, which typically that's a pretty good raise, you're not even keeping up with the purchase power of the dollar from the year before. So it actually doesn't equate to any raise. You're actually losing in that scenario. And so it's been in a difficult and a kind of an inverted situation for about the last year and a half. And now we just saw, and if you look at this chart here, you can see that the green line, which is average hourly earnings, has now grown faster for the first time in a long time than inflation. This is kind of where the economy, as it's been weird in the past few years, when we start to see this sort of thing happen, it indicates to me that things are starting to kind of get to a more of a normal state.
We know that the economy is so strong, and it's nice to know that your money can go further now. Like it's a good sign.
Yeah, we were talking about that some people are seeing that. Are you guys seeing that in your day-to-day grocery store, buying eggs?
Gas.
What are you seeing?
Gasoline, and
Yeah.
I have noticed groceries are cheaper.
Have you?
Yeah, eggs are about $2 cheaper.
I buy the fancy eggs though. That's my
Yeah.
fault.
Yeah,
That's
well,
on
if
me.
you're buying the organic, cage-free.
The happy eggs that are blue and brown.
Yeah, I mean those
It's the only joy I
those chickens have their own apartments.
Yes.
But you're gonna pay $10 an egg for those.
Worth every penny.
Don't expect those to come back down. And then the last thing that we want to point out today that has to do with the housing market, and this is just kind of an interesting thing, is that now old homes are now costing more than new ones. And it doesn't really make sense logically. I mean, would you pay more for an old car or a new car? Would you pay more for a new home?
Well, as
or
an
old
older
home?
person in the
But
room, I do love this. Sometimes old is good.
I can
Yeah.
make the argument as to
Yeah.
why an old home or an
Good
existing
experience,
home.
wisdom.
Yeah, I mean those homes are already in an established area.
Yeah.
So when you're, looking to buy a home and you want to buy a home in Scottsdale or in
Yeah.
Phoenix, they kind of have the power to dictate whatever the price is going to be. And then something we've always talked about here is we've talked about quite a bit is that they're locked into the lower interest rate.
This is the purchase of homes. So this isn't people that own homes. This is the people buying homes.
Well, so I bought an older home. It's about 50 years old, but it was very much for the neighborhood. I wanted to be in that neighborhood
Mhm.
particularly. And so I know John says a lot that the neighborhood is the amenity, and that very much was for me. This is where I wanted to be. And so I'm happy to take an older home, and I will keep fixing her up. You have to prop her up on her little sticks. She's gonna last.
Well, it's kind of an anomaly because I definitely see the point, and there are some neighborhoods where they are desirable. They're older neighborhoods, but if you go out to some of these newer neighborhoods that have new homes, they're a bit more thought out when it comes to the amenities for that area. Then the lifestyle, I think, is probably overall better there, but the location a lot of times is worse. You're further away from the city center. So I don't know if this is something we'll continue to see happen. Typically, existing homes are far behind new homes, but it just surpassed it, and it's kind of an interesting data point that we'll keep looking at.
Do you think it has to do with people are just so desperate to, people who want to buy are just so desperate for any home that's available? And we don't have a lot of new home construction happening, and so that's kind of tipping it.
So that is Heather's hypothesis. So you could be right. I don't know. I
Always
mean, I
right.
think that the new homes that were available to purchase have declined up until the last couple of months. The new home builders are now starting to build more of them because they expected that when interest rates increase that no one would be buying these new homes. But we've actually seen people continue to want to buy homes even at higher interest rates. So that some of the inventory could have something to do with it. But that's something we'll track and see if that trend continues.